Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, October 25th through Friday, October 29th, 2010. Well, folks, let's discuss exactly what happened last week, what to expect in the coming week. What you're seeing right now is the SPY, which mirrors the S&P 500 on an intraday basis. This is all the way back to Monday right here, Monday, Tuesday, Wednesday, Thursday, and Friday. Net, you can see that for the week we were up just fractionally. You started the week right around the 117.50, 117.75 level, and you ended up at about 118.35 on the SPY. So again, a little bit of a positive week, but not much. The bigger picture, if you take a look at your 60 minutes, shows that really since the 13th of October right here, the market has almost gone nowhere. Take a look. Here's on the 13th, which again was a week and a half or more ago, almost 2 weeks ago. Just draw that trend line right across and look at that, folks. I mean, you're just actually a little bit lower than that area, which again tells us that the market is not moving dramatically one way or the other. Now, what you might say to yourself, well, what's the catalyst here? We've had earnings, that hasn't done anything. Economic news, that hasn't done anything. So what's keeping the market in check? The answer to that would be the US dollar. All right, if I put up the UUP chart, you can clearly see on the daily chart that the dollar made a bottom about a week ago or so. Ever since that dollar bottom was made, the markets had a lot of trouble going to the upside. And remember, markets move inverse to the dollar. So if the dollar's moving up, chances are markets aren't going up. They're probably neutral or even slightly lower. And again, if we go back to that 60-minute chart of the SPY, let me just bring that back up, you can see that the market, again, from this October 13th little pivot high, for the most part, it's just down slightly. Just very, very down slightly. Now, you might say to yourself, well, why isn't the market down more? I mean, here we have the dollar. The dollar has had a small bounce. It's not been a big bounce. It's been a very minor bounce on the UUP. Let me bring up that chart. And again, if you go back to the 13th, you can see clearly this is the dollar's angle. So it has moved up. So why isn't the market down more? The answer to that is you have Federal Reserve intervention. All right, they're out there buying tips, POMO, permanent open market operations, which again is essentially propping the markets up. There's been a lot of rhetoric. Earnings have been actually pretty decent for the most part. We've seen some stocks come in, but for the most part, stocks have moved in a neutral way, if not a little bit higher. We talked about Apple. Apple on earnings initially sold off, but it regained most of what it's lost. Google went up very dramatically on earnings. Last week, Amazon after hours started to sell on earnings, but by the next day, on Friday, it closed up $4. So for the most part, earnings are doing well, and that's keeping the markets in check here. They are, again, in line or going sideways, but the dollar moving up is keeping them from going up, and that's really the issue here. And you have to wonder next week, one of the big issues is going to be, does the Federal Reserve pound the dollar down again to give the overall markets another leg to the upside? And that's what it comes down to, folks. I mean, you could talk about anything you want, earnings, economic news. It comes down to the dollar. And I know it stinks for traders out there. Traders say, "Oh, it should be economic news," or even the media. The media talks about economic news and earnings news. Honestly, that's BS. Any analyst or any media hyping saying that it's more to do with economic news or earnings, it doesn't know the markets at all. It's all about the dollar. And again, for now it is. Eventually that will change, but we're in a period right now where currency wars are going on. You have major issues out there, and that's what people are paying attention to. That's what the programs, the high-frequency trading programs, black box trading programs, are programmed to do. If the dollar goes up a little bit, markets are going to come down a little bit. If the dollar goes down a little bit, markets are going to go up a little bit. You can see it intraday. For those of you that may not trade intraday, just watch for 10 minutes, 20 minutes. Watch the dollar and just watch the markets at the same time live, and you will see an inverse correlation there. Okay, now again, going back to the 10-minute chart, you can see initially going back on the 18th, we had the sharp up day, then a sharp down day on the Tuesday of last week, a reversal to the upside, and an even more dramatic reversal. And just you can see the whippiness is returning, except for Friday. And that's what I like, and I think that's my thesis of the day here for this weekend technical analysis video, is to continue to remember that as we get further and further into the later portion of this year, you should be expecting the volatility to pick up. The only day without volatility was Friday. Friday was essentially the lightest trading day of the year, right along the lines of the lightest trading day of the year. Volume was 100 million on the SPY. And again, you have to remember, earnings were kind of done with for the week. The market was exhausted. The dollar ended up not really doing much on Friday. Friday, people, again, are just taking off early. It's just the way it is. And again, you can see very tight range right here on Friday. You can even zoom in a little bit. Look at the trading range on Friday. Truly amazing. The market was just sideways. There was nothing to do there. I had the day trading chat room that I was doing. In the early morning session, we basically had a half day there because it was so quiet. And again, that just tells you to take Fridays as a breather. Enjoy a little bit of a long weekend. It's not going to be forever where you're going to get Fridays to be a quieter session. So again, enjoy it while it lasts, because it will not last, and you'll have crazy action again in the not too distant future. But again, noting that action the rest of the week, you did have a lot of big swings. I mean, look, the 18th, a big sharp up day. The 19th, which was Tuesday of last week, sharp up after a gap down, then reversal, and it was a big down day. This was probably the biggest down day we've seen in 2 months on Tuesday. Then you had a major up day on Wednesday, a push higher on Thursday, then a reversal, and then another reversal, and then again Friday was quiet. Now, next week, what do we want to look at? And first of all, the first thing you should be all watching next week is the dollar. Watch the dollar, see how it trades. Dollar up, market should be lower or neutral. Dollar down, you have to anticipate market continues to get a bid. A lot of stocks seem to be getting a little tired. Even Amazon and some of these other places. Apple, you can see Apple slowly been coming in after rallying off of earnings on a gap down. Apple the last few days has slowly started to come back in. That is telling us that this market is a little tired. The leaders aren't able to perform anymore. And again, they're going to really have to juice the dollar to the downside to get these things to continue. Monday, first of all, Monday, unless something over the weekend happens with the G20, which again, everything that I'm hearing is a pretty much a non-event, watch the dollar tonight on Sunday night. That'll give you an inkling about where the markets are going to go and where the futures are going to go. But in general, Mondays are known for very, very light trading. Mondays and Fridays, light. Then Tuesday, Wednesday, Thursdays, that's where the action is going to be packed into. And again, it's going to be mostly about the dollar. You'll have a little impact on economic news and a little impact on the earnings, all right? Next week, existing home sales, consumer confidence, durable goods orders, new home sales, initial claims, GDP, all right? Third quarter GDP will be out. These are going to be big numbers, especially that GDP number will be very, very big, folks. All right, Chicago PMI, Michigan sentiment. There's a lot of economic news next week. But again, remember, economic news makes up about 5% of the market direction. It's 90% on the dollar. Remember, inverse to the dollar, 5% earnings and 5% economic news. That's what it is, folks. And again, any comments by the Fed should be listened to very carefully because that will be a major issue. All right. Texas Instruments reports Monday after the bell. That'll be a little bit of a big event for tech and the semis especially. So keep an eye on that. TXN, let's punch up the chart there on TXN. You can see good move up on TXN. It's hovering at the higher end of the range, so it's hard to imagine it can go much higher. But again, I don't play earnings. It's just too high risk. You want to always keep the odds in your favor 90%, 85% of the time. That's really the best any trader can do. As long as you do that, you'll be consistent with winners, with one loser every 9 times or so, and 9 out of 10, 8 out of 10, something like that. All right, in addition, folks, anyone who's not in that research center, you want to be. Your research center is our main key service that we offer to the public, and again, it gives you everything you need to know to make money in the market. I don't care if you're a swing trader, if you're a long-term investor, or if you're a day trader, everything you need is in there. The education, the calls, the analysis on a day-by-day basis, the understanding of psychology and what the Fed is doing as the manipulation continues in this market, it is all dissected in that research center. And again, you can find that at inthemoneystocks.com. Now, let's go back to the SPY and just talk about some levels. This is the daily chart. We really don't cover the daily chart in these free videos because that's for premium members only of the research center. So what I'm going to do is go to the intraday, and we're just going to ball this chart, just see exactly what we can see. First of all, next week early, the big level that you should first of all be looking at is the double top from Thursday. Double top from Thursday at 119, just above 119, that will be a key level. If you get through that level, watch the 119.35 to 119.50 level. That will be another massive level in this market on the SPY. Notice how, again, you kept in a tight range on Thursday. This could be looked at as a little bit of an in-spirit of bull flag pattern from this sharp move up. But, again, we'll see how that plays out. A lot we'll have to do Monday with the dollar. But Mondays, again, usually very light trading days, in which case you have a neutral to slight upside bias, unless the dollar from the G20 makes a major move to the upside, in which case then you'll have some downside action. On the downside, if you start to fall, look at the moving averages down here. 200 moving average, this pinkish trend line right here. That's right around the 117.90, 117.80 level. If you get through that, you're going to retest this white line. The white line is a major line stretching all the way back to this gap up. Take this pivot point, connect it through here, connected to right there, and drag it through. You can see we broke through it, and then they gapped the market back, saving it again. That happens so many times, folks. I cannot tell you how many times the Federal Reserve is out there pushing the market in one direction to retake certain breakdown levels. This was a major breakdown right here, and then the next day they gapped it above that level. Significant is the fact that they gapped it above. That way it could be held and reestablished as a major level, and again, off to the races it went. Then it came down on Thursday, tagged that level, and bounced off again. So you want to watch to see, can you get below this level, and then the next day do you stay below it? If that happens, look for more downside in the market. All right, so again, this white line, I'm going to make the call right now, is a major level for the downside watchers for the week. All right, if you can take that level out and you stay the next day below it, then that will be considered a breakdown in this market because they didn't save it or they couldn't save it, and that market could easily go to this double bottom here at 116. You take out 116, you're going to go right here to 115.60. And then ultimately down to this little gap window area or this little pivot low at 115, and then the gap window right here at around 114.75. So there's a lot of key levels to watch this week, folks. You want to be in tune with that research center. I can't stress that enough. I'll be making some big calls. In fact, a hidden gem should be out Monday morning. Hidden gem, the last hidden gem, rose about 30 to 35% over the last time since I gave the call. The previous hidden gem ran over 100%. The last year we averaged 129% returns on each hidden gem. I mean, it's been spectacular. I will be making more calls on these folks and putting out another hidden gem. Join the research center. It will be out. Take care. Enjoy the rest of your weekend, and let's make some money next week. Talk to you soon, guys.